Good afternoon, traders. This is Christian from Market Trade Group, and this is your end of day market video for Friday, February 7th. Welcome to also the end of week video too, where I recap the week's performance. I don't know what you want to call today. I don't, feels like another Groundhog Day Friday, which is, we've been seeing these kind of nasty price action leading into the weekend. And then, I think if you've been trading for the last couple of weeks, then you know what happens after that is that we have some follow through downside action on Monday. Will that happen again on Monday? I don't know. Obviously, when we have a day like we have today, it's not something to really try to basically think that we're going to rebound on Monday. I mean, we do have the Super Bowl on Sunday night, so maybe traders will be distracted. But overall, not great price action. We're in a headline-driven market, and the market is very sensitive to that right now. We have not gotten to the point where the market is kind of has gotten like some calluses where it's getting used to a headline-driven market. It seems the market is just very sensitive to anything that takes place in terms of anything that has to do with tariffs or anything other. So it tells me that the sentiment probably is too high right now, considering how sensitive that market is to headlines. And then number two, it was very, again, for lack of a better word, just interesting how the economics were today. The market was pricing in about a 1% move, looking at the option market about for what was going to happen today, in terms of Friday with jobs and other data, which I'll get to in a second. And the small caps were pricing at about 1.45% moves, almost 1.5%. Now the small caps were down, what, 1.2%, so it wasn't that big of a move, but certainly the market was pricing in a big move down, not a big move down, but a bigger than normal move, because of the economics for the day, and maybe it was just and Friday as well. I want to go through a couple of the economics because I thought this was very interesting because we basically got through the 8:30 numbers and there really wasn't much of a move, and you kind of felt like, hey, at least I felt that way. It was like, hey, we're out of the woods. It was a very mixed report. There were some things in here that did not look very good. Now, number one, so let's just talk about this really quick. The change in non-farm payrolls was a miss, right? So lighter than expected. So you normally think the bad news could be good news in terms of the equity market, and bonds would rally on that, and so on and so forth. What was out of whack here, or just different, was average hourly earnings month over month came in 0.5% higher. So I always mention this with whenever one of these jobs reports comes up, because everybody's always focused on, oh, what's the headline number, the private payrolls and so forth. But there's so much more to these reports, and it's whether or not inflation is ticking up or ticking down. I mean, we know that everybody's been feeling that a bit with the price of eggs and the price of some other commodities. I think coffee's at an all-time high. So there are things that are definitely a cause for inflation. We know that there's other components of inflation that have been trending down a little bit. Like I've heard rent is has been trending down a little bit. But you look at the average hourly earnings, and like this is, I think, and I think that's how the market interpreted this, was that this is more important than this. The other thing that was very odd was the previous month was revised higher. So the previous month was revised higher, and this month's comes in lower. So you kind of, these probably negate one another, and you kind of left with inflation. And then we had, in the market, if we kind of just look to see how this went for today, we're kind of just sitting in, we actually try to go higher a little bit for the first half hour of the day. And then we had the 10 o'clock data, and that was it for the market. So what happened there in terms of the 10 o'clock data? Well, you get the University of Michigan sentiment numbers, and this is a survey, but look at what they're looking for the inflation number, right? They're looking for a very high, like they're expecting inflation to go higher. And that's kind of what we've been seeing in terms of in terms of the economics that we've been getting. The last, and by the way, we're going to get another inflation report on what, Tuesday? I think that's Tuesday, 9th, 10th, Wednesday, it looks like. So we're going to get another round of inflation reports. But, if you go and you look, this is ticking back up again. So I don't mean to laugh, but I mean it's depressing. And you look at the last report, and I've done this analysis in these videos with you guys. And if you annualize that, that is 4.8%, right? So again, forget about. I know that people are very odd with this stuff when they look at the year over year inflation number and they see that they're like, look at this. It's only 2.9% year over year. And they put out these estimates. All this is taking a look back over the last 12 months. It is nothing to, all this is taking the last 11 months and adding the newest month on. So really, when you think about it, like that's over. Like that last 11 months, what's most important is that new month over month number. So when you get 0.4%, which is what we got last time, that's 4.8%, which is kind of what this is trending at. So inflation isn't going anywhere, and inflation has actually been ticking up. So we'll see. We'll get that report. And we'll also get the PPI report next week where they're looking for zero point 0.3. Remember, we just had the PCE number two, which also is 0.3. And that's not particularly good either, because when you annualize that out, that's 3.6%, which is not even close to what the Fed wants to see it go down to, which is 2%. So again, and a reminder, this is increases after increases after increases after, right? This is the rate every month of a change. So it's tacking on to all those the last couple of years where we've seen this big inflation. So inflation continues to rise, and hence the hiccup today in the market. And that's my interpretation of why this went on. We kind of stabilized for a little bit. And then there was another, then Trump was speaking someplace and brought the market down. And I kind of just gave up after that because I knew it was Friday. And I was like, I don't think we're going to get any more clarity out of, what Trump is talking about in terms of tariffs. So down we go. And it's another Friday. It's another nasty Friday. Remember, this is what we did the Friday before, right? So very, um, similar to what we did. So the question is, are we going to gap down like this again? I don't know. I mean, I don't have a great reason why we would gap down like that, but you know, um, who knows? We'll see how it goes. But you could see that we did stall out and we made a lower high for the week. We kind of ran up into some resistance. And again, right now, I'm even trying to tell myself this over and over is that, you have to be careful about this market because it's very range bound. It glides up a little bit, but then we're getting, and look at the price action, right? I mean, it's not as bad as it was, I guess, towards the end of the day on last Friday, but overall, it's not good. And this year is shaping up to be a very tricky market so far too, and that's how I would classify today's price action. Q's got a little bit outside of the value area, and so I mean, this isn't a major breakdown or anything like that. It's just a very frustrating market to try to trade on a day-to-day basis, right? Unless you're really fading, really fading moves aggressively, and that might be more of what we get. It's something that we're going to have to watch as we continue to go along here, but. There's the Q's action and IWM. And again, this one you do have to laugh at a little bit because IWM just cannot get over this 50-day moving average, and it's right back to where we were. So if you like range bound markets, then I guess this is for you. But a lot of chop and a lot of fake moves, rejected at the top of the value area. The positive was that the bullish 80% rule completed, and that's it. And that's all you got. Right. So again, it makes to me that like if that's the way that you're thinking that this market is going to be, which is basically a chop fest, then I think that you're at least given some chances where we are rallying back where you can take profits. One of the things too with earnings season, which I find very interesting, because if you would have looked at some of these earnings reports, and these are just the up moves, I'm going to talk about the down moves too. But if you would have looked and saw some of these names, not DocuSign, Doximity up 36% today, Affirm up 22%, Pins up 19%, Cloudflare up 17%, Expedia up 17%. Right? If if I were to give you those names and say, hey, do you think the market did well today, or do you think that the market did did poorly today. I would think that you would say that the market did pretty well today, but this is what we're getting in this market is we're getting some very good stories, a couple good themes. And look at Oklo. Is Oklo's up another 16%? Again, you look at some of these charts and you're probably like, oh my God, this market must be raging higher, right? And that's the same thing with Reddit, right? Which also made a new high today. We know, I think everybody knows at this point, Palantir, a little bit of a toppy looking candle, but one hell of a move that the stock made yesterday and the beginning of today. But you could rattle off, 5 to 10 other names too that look very, very good. So, I think this market is being distracted a bit because we've got this higher inflation right now. We've got the possibility of trade wars right now. Now, it's like I said, it was not all positive because you also have that was at Build.com was down 35%. Skechers was down 12%. And a few other names that didn't do particularly well. The home builders really got beaten up today. So I'm just going to look at a couple sectors with you guys. This is ITB. Which really got hit hard today. This was, I think, your worst performing sector when you look at performance. The home builders were down 3% today. Also, retail got hit hard today too. Look at this stock, not stock, this ETF. Talk about a rejection just where it was yesterday and all the way back to the bottom of the value area. Tech, I want to talk about this for a second. Tech doesn't seem like it wants to go anywhere this year. Look at it. If that's not a sideways chart, I don't know what is. But for tech, so Amazon obviously reported earnings. Whoops, that's the wrong symbol. That looks even worse. But Amazon had finished down 4% for the day. And it is, I think you can kind of conclude that this is mostly the lag seven. Besides Meta and Netflix, I think, and Meta did fine today too, was actually positive for the day. Netflix is another one that looks pretty good, but outside of those two, and I know Netflix is not considered Mag 7. That's why I call them the Great Eight. I don't know why Netflix isn't in that group, but I didn't make up the group, so that's why I call it the Great Eight. But the rest of these names are not looking very good. And look at Google today. Google was very ugly today and broke lower. And besides, I know I keep hearing about all the call buying, the call buying, and the stock is gets hammered down 3%. Microsoft also doesn't look good. That's another one I hear about every day. All the call buying, the call buying, the call buying. These charts. So I get it. It's on the lower end of the range, and maybe it will bounce over here. But I think that personally, my system says to stay away from names that have had bad earnings, or at least a bad earnings reaction. Give them some time. Like normally, when a stock has a bad quarter, it becomes dead money for the next quarter because it didn't perform well, and it's not going to attract institutional money. Now, with call buying, sometimes we see that there's an activist involved. Now, I don't know if that's the case with that. I mean, look at what Uber did today. Uber, by the way, did not get out of its value area, but Ackman, was buying calls in this thing probably, a couple weeks ago because we did see call buying in this, and he's involved in the name. So, that's always what the call activity will kind of shed some light that maybe there's an activist involved in there. But ultimately, I use my trading. Everybody has their own trading system. I don't go after names that have had bad quarters. I just take them off my list unless they come out with something new. And we kind of just go from there. Here's the performance for the week. All right, GDX was your best performer, and SPY finished like down slightly for the week. They did come back. Q's actually finished slightly positive, even after today's move of down 1.3%. The Q still finished slightly positive, so a pretty volatile week. International markets outperformed this week. Bonds outperformed. Gold outperformed. The dollar should be in red here, which I will change that for you. Bitcoin had a big move down this week. So let's look at Bitcoin because Bitcoin, I get like like something else with a mixed signal today. This was rallying pretty decently pre-market, and look at it give it all back. And this doesn't look particularly good here because this is the first, or excuse me, I think this is around the second close below the February value area. So I do think that sometimes Bitcoin can lead moves. It is a sense of riskiness, risk on, risk off. And this is below the 50-day moving average and below the value area. So that's not a very good look. Other groups this week, solar finished up, Chinese internet's finished up. Baba almost took out this VPOC, very, very close to taking out that VPOC. Here's KWeb. Again, I think that this is like, so it's nice to see this above its value. Or I am long KWeb, by the way, and I'll stay long the China internet ETF as long as it stays above 30.59. But this is tough. And I don't know if you're going to see such big moves in this. I think you're going to see more gradual moves, but that's just my guess there for the China ETF. Tech actually did finish positive for the week, somehow up 90 basis points, and then a few groups that were down over 1%. Biotech, retail in there, consumer discretionary down 2.8%. That's a big move. And again, part of that is Tesla, which doesn't look so now. Tesla and Amazon are pointing to the downside, but that's a break of the 50-day moving average. Here's Tesla, which continues to kind of move below its value area. This is another one that I hear, oh, the call buying, the call buying. But I think this takes out that VPOC down there at 338 because this is now trending down here over the last couple of weeks and broken the 50-day moving average as well. All right, so where to kind of go next here with this? Here was a firm had a real nice day today, and the payments, that's been a theme. All the payment names are been pretty strong. Here's MasterCard. I did get along some AXP yesterday, which didn't act well today, but still holding its trend. I have to be concerned there a little bit with the lower high. Just go through the rest of this. In terms of international, you got a lot of emerging markets that did pretty well this week. Chile, Mexico, South Africa, Peru, Philippines. And one other thing that kind of was interesting to me was the move in copper, right? So copper is normally pretty good for emerging markets. Look at what copper did, right? So, usually there's a correlation between emerging markets and copper. So, again, maybe this is the year of international, even though EM did not have a good day today, but those emerging market countries did do very well. Philippines in there too, Peru, South Africa. China was up 2.6% for the week, right? And European areas did very well too. And you could see EFA was up, which is Europe and Japan mainly, was up 0.5%, and EEM outperformed up 1.1%. Other sectors, I'm just going to walk you through a couple of these things here. Here's my watch list. Of course, Palantir was on here, but that was a little bit noisy because, of course, there was an earnings report, which I don't normally like to put names. I don't normally like to put names on the watch lists, but I thought that the Palantir chart looked very good going into, I mean, here's where we were like just before the earnings report. One heck of a move, but that's why I put it on the watch list, just because the chart looks so damn good. But a few names, IBKR, which I continue to kind of add on dips. That is a name that I got long. And again, like I said, had position on, but I thought looked really good. ACN, I took profits. This was a nice profitable trade for me this week. Dash is another one that's been doing pretty well. So that's it. I'll leave it there for there. I'll leave it there. Again, look at the sectors. I went through a couple of them. I'm not going to go through all of them, but software, banks, the financials, right? So I mean, that's the one thing I think that when you look at financials, for example, that made a new intraday new high today, it's tough to really get that bearish or discouraged about the market when you see financials up at right around 52-week highs. I think we just kind of have to let this work its way out and wait until the market kind of gets a little bit less sensitive to these headlines. And it's a process, right? Eventually the market will get over a tweet or whatever about tariffs, but it's not there yet. But overall, I think there's plenty of pockets of strength, as I went over some of the names too that were up. So I think you just kind of really have to be patient with this market and understand that we might be consolidating for a bit. Have a great weekend, guys. See you on Monday.